All right, we'll start with audit of hospital. So special steps that are involved in audit of hospital are as follows. First of all, very important, hospital comprises of patients. So register of patients is very important. Vouching register of patients with copies of bills issued, verifying them for selected period, also seeing that bills have been issued to patient and that amount was recoverable according to the rules of the hospital. Then collection of cash. Auditor has to check collection of cash which is entered in the cash book with receipts, counterfoils, and other evidence. For example, copies of patient bills, counterfoils of dividend and other interest warrants, copies of rent bills, etc. Apart from this, income from investments, rent, etc. We have to see with reference to the property and investment register that all the income should have been received by way of rent on properties, dividends, and interest on securities. Then we have to check legacies. Legacies क्या है? Clear हो गया है ना आपका अनिल?
Yes, ma'am.
So legacies are gifts, okay, which are given.
Yeah.
Legacies and donations received for specific purpose have been applied in the manner agreed upon. Next is reconciliation of subscriptions. So tracing all collections of subscription and donation from cash book to respective registers, reconciling the total subscriptions due by subscription register and the amount that is still outstanding, authorization and sanction, that is vouching all purchases and expenses and verify that capital expenditure was incurred only with prior sanction of the trustees or managing committee and that appointments and increments to staff have been duly authorized. Next is grants and TDS. Verify that grants, if any, received from government or local bodies have been duly accounted. Also, refund in respect of tax deducted at source, that is TDS, has been claimed. In case of budgets, compare the total budget, the total of various items of expenditure and income with amounted budget and report them to the trustees or managing committees with significant variations. Then internally check, examine the internal check as regards the receipt and issue of stores, medicines, linen apparatus, clothing, instruments, etc. to ensure that purchases have been properly recorded in the inventory register. In case of depreciation, see that depreciation has been written off against all assets at appropriate rates. Registers may we have to inspect the bonds, shares, scrips, title deeds of properties and compare their particulars with those entered in property and investment register. Inventory, especially of stocks and stores, as at the end of the year, and check a percentage of the items physically. Also compare their total values with respective ledger balances. Apart from this, last point is management representation and certificate. So getting proper management representation and certificate with respect to various aspects covered during the course of audit is very important. Next is audit of club. Now club mein, there is entrance fees, which is one of the source of income. So these entrance fees has to be checked, rechecked against counterfoils issued to them as a reference to minutes of the managing committee. In case of subscriptions, member subscriptions has to be vouched with counterfoils and trace receipts for a selected period. Also, the amount of total subscriptions due with the amount collected and outstanding shall be reconciled. In case of arrears of subscription, ensure that arrears of subscription for the previous year have been correctly brought over and arrears for the year under audit and subscription have been correctly adjusted. Of course, arithmetical accuracy, that is calculation, total of various columns of register of members, and we have to tally them across. Irrecoverable member dues, see that the register of members to ascertain the members due which are in arrears and inquire whether necessary steps have been taken for the recovery. Also, the amount considered irrecoverable should be mentioned in the audit report. In case of pricing, verification of internal check As regards to members being charged with price of foodstuffs is very important here. Also, drinks provided to them and their guests, as well as the fees chargeable for special services rendered, such as billiards, tennis, has to be internally verified. Next is member accounts. So, tracing all the debits for the selected period from subsidiary registers maintained, and also confirming that account of every member has been debited with a amount receivable or recoverable from him. In case of purchases, vouch purchases of sport items, furnitures, crockery, etc., and trace their entries into the respective inventory register. In case of margins, so also the amount, sale price, and the rate of gross profit has to be vouched. In case of foodstuffs, cigars, wines, and the unsold inventories, along with their provisions and storing at the year end, should be physically verified and its valuation should be checked. In case of inventory, checking the inventory of furniture, sports material, and other assets physically with the respective inventory register of inventories prepared at the year ending is important. In case of investment, investing or inspecting the share scripts and bonds in respect of investments, checking their current values for disclosure in final accounts, and also ascertaining the arrangement for the safe custody are satisfactory. Then we see management powers. We have to examine the financial powers of the secretary, and if these have been exceeded, specific case report for confirmation by the managing committee that has to be examined very carefully. Any doubts so far, guys?
No, ma'am.
We'll
No, ma'am.
proceed to audit of cinema. So here, internal control mechanism has to be checked, that entrance to the cinema hall during the show is only through printed tickets. They are serially numbered and bound into books. That the number of tickets issued for each show and class are different, though the numbers of the same class for the show on the same day each week run serially. Then for advance booking, a separate series of tickets have been issued. The inventory of tickets is kept in the custody of a responsible official. Then confirming that at the end of the show, the statement of tickets sold is prepared and cash collected is tallying with it, that is agreeing with it, verifying that a record is kept of the free passes and that these are issued under proper authority. Reconciling the amount of tax collected with total number of tickets issued, vouching the entries in respect of cash collected on sale of tickets for different shows on a reference of daily statement, which have been test checked carefully, verifying the charges collected for advertisement slides. Now, before movies and at the time of interval, we see advertisements, right? So those advertisements are source of income for the cinema owners. So amount collected through those advertisements should be cross-verified and kept at the cinema hall along with the agreements entered with the advertisers. So vouching the expenditure incurred on advertisement, repairs and maintenance, no such part should be capitalized. That is, everything is the revenue expenditure. Confirming the depreciation on machinery and furniture that has been charged at appropriate rate. Vouching payments on account of film with bills of distributors and in process the agreements concerned should be referred to. Examine unadjusted balance out of advance paid to the distributors against film hire contracts, if any, in respect of which advance was paid. Management should be asked to make a provision in respect of advances that are considered irrecoverable. Also, arrangement for collection of share in the restaurant income should be inquired. Either a fixed sum or a fixed percentage of the taking may be receivable annually. Now, in case of restaurant which is run by the cinema, Its accounts should be checked. Audit should cover various sale of items of foodstuffs, purchase of foodstuffs, cold drink, etc. as in the case of club. Next, we see hire purchase and leasing companies. In case of hire purchase, it is very important to check the hire purchase agreement, means the agreement under which the goods are let on hire, possession of the goods, which is delivered by the owner along with the periodical installments. Property in the goods is to pass to such person only at the payment of the last installment. That has to be checked. Such person has the right to terminate the agreement at the time before the property passes. Here, hirer means the person who obtains or has obtained the possession of goods, and owner means the deliverer or the person who has delivered possession of goods under a hire purchase agreement. So while checking the hire purchase transaction, auditor may examine the following points: that this hire purchase agreement is in writing and signed by all the parties. Agreement specifies price of the goods, cash price of the good, date on which the agreement shall be deemed, number of installments by which the hire purchase price is to be paid, goods on which the agreement relates, and ensure that the installment payments are being received regularly as per the agreement. Now, in lease agreement, there are two parties, lessee and lessor. So, lessee is the person who acquires the right to use an asset for an agreed period. Lessor is the party who is getting consideration of payment of rent. Now, in case of lease agreement, the legal ownership of the asset remains with the lessor, that is the leasing company. But in substance, all the risk and rewards of ownership of the asset have been transferred to the lessee. In other words, lease is in effect a financing arrangement. Such leases are termed as finance lease. An operating lease, on the other hand, is a simple arrangement where rent, in return of rent, the lessor allows the lessee to use asset for a certain period. Clear so far?
Yes, ma'am.
Also, okay. So a normal finance lease transaction usually goes through the following modality. So the lessee will select the equipment and satisfy himself about the functional fitness and specifications. Lessor has no participation at this stage. Having chosen the equipment, lessee approaches the lessor directly or through a lease broking agent. Then the lease agreement is broadly negotiated and the rates are finalized. The lessor places an order on the manufacturer as chosen by the lessee. The manufacturer delivers the equipment on the site of the lessee. The lease agreement giving detailed terms of contract is signed between the parties. During the lease period, the lessee will pay all the rentals regularly as agreed in the agreement. Will keep the equipment in good repair and working condition. Will be entitled to any manufacturer warranties or after sales service. At the end of the lease period, the equipment shall retreat, that is, go back to the lessor. However, uh, a renewal right may be given or allowed to participate in purchase of the equipment when the lessor intends to sell it. So no purchase option shall be given to the lessee in the lease agreement itself. Now, audit procedures here mainly are as below. The object clause of leasing company to see that the goods like capital goods, consumer durables, etc., in respect of which the company can undertake such activities. Further, to ensure that whether the company can take or undertake financing activities or not, whether the whether there exists a procedure to ascertain the credit analysis of lease, like lessee's ability to meet the commitment under lease. Also check whether there exists a procedure to ascertain the credit analysis of lessee, like lessee's ability to meet the commitment under lease, past credit record, capital strength, and availability of collateral security. The lease agreement should be examined and the following points may be noted. Description of the lessee, the equipment and the location where the equipment is to be installed. Apart from this, the amount of tenure of lease, dates of payment, late charges, deposits or advances, etc. should be noted. Whether the equipment shall be returned to the lessor on termination of the agreement and the cost shall be borne by the lessee. Whether the agreement prohibits the lessee from assigning the subletting equipment and authorizes the lessor to do so. Examine the lease proposal form submitted by the lessor. Ensure that invoice is retained safely. Examine the acceptance letter obtained from the lessee, which is indicating that equipment has been received. See board resolution authorizing a particular director to execute the lease agreement. And see that the copies of insurance policies have been obtained by lessor. All right, now AS 19 defines two types of leases. One is finance lease, other one is operating lease. So finance lease is an arrangement wherein the lease agreement transfers ownership of the asset to the lessee at the end of the term. So the lessee has the option to purchase the asset at a price that is expected to be sufficiently lower than the fair value. Lease term is major part of the economic life. At the inception of the lease, the present value of minimum lease amounts to a substantially least of the fair value of the leased asset. Leased assets are of such a specialized nature that only lessee can use them without major modifications. Now coming to operating lease, an arrangement that does not transfer substantially the risk and rewards incidental to the ownership qualifies as an operating lease. In other words, an operating lease is a lease agreement other than finance lease. There's a table which differentiates between both. Please go through this while you have time. We'll come to audit of hotels. We check internal controls. Now pilfering. Pilfering means choti choti choriyan, small thefts. This is the greatest problem in any hotel. And importance of internal control cannot be undermined. So it is the responsibility of the manager to introduce controls which will minimize the leakage. So what happens in hotel industry? Food grains, foodstuffs, ingredients, cutlery, small towels. These are the things which can be easily pilfered by the employees or the other members there. So here, auditor has to be very careful while checking. Also, it is the duty of the management to properly prepare internal controls. In case, even if the internal controls fail at times, it cannot be told or it cannot be stated that the management has poor internal control because pilferage is very common in hotel industry. So the auditor should verify a few restaurant bills with reference to KOT, that is kitchen order tickets. This would enable the auditor to ensure that controls regarding revenue cycle are in order. Auditor should satisfy himself that all the taxes collected from occupants on food, that is at times if you see McDonald's, KFCs or large chain of hotel industries, so GST is charged. Have you noticed at times CGST, SGST?
Yes, ma'am.
In hotel bills, in that case, auditor should check that amount taken is properly uh, paid or submitted to the tax authority. Now, in case of room sales and hall bookings, the charge for room sales is normally posted to guest bills by the receptionist or front office in case of large hotels. So here, there is a guest register which is maintained and the auditor should carry out tests to ensure that the correct number of guests are charged for the correct period. Any difference in charge rate or guest bills on standard room should be investigated to ensure that they have been properly authorized. In many hotels, the housekeeper prepares a daily report of the rooms In that case, this report tends to be not to be permanently retained, and the auditor should ensure that the sufficient number of reports are available to him. In case of inventory in any hotel are both readily portable and saleable, particularly the food and beverage inventories. So it is extremely important that all movements and transfer of such inventories should be properly documented to enable control to be exercised. Areas where large quantity of inventories are held should be kept locked. The key should be retained by the departmental manager. Key should be released only to trusted personnel, and unauthorized personnel should not be permitted in the stores. So many hotels use specialized professional valuers to take and value the inventories on continuous basis. In order to satisfy himself, auditor should also at time attend physical inventory taking and carry out certain pricing and calculation tests. In case of fixed assets, the accounting policy for fixed assets of individual hotels are likely to differ. However, many hotel accounts for certain quasi-fixed assets such as silver and cutlery on inventory basis. This can lead to confusion between each inventory items and similar assets which are accounted for one or more normal form on asset basis. So it is very important that very detailed definition of inventory item exists, and auditor should carry out tests to ensure that the cost of repairs, minor renovation, redecoration are treated as revenue expenditure, wherein major alterations and additions should be capitalized. Next, we see casual labor. So the hotel trade operates to a very large extent on casual labor. So they get wages, daily wages, weekly wages, and such wage payments are frequently inadequate. So auditors should ensure that defalcation on this account does not take place by suggesting proper controls. In case now, wherein customers are acquired through travel agents, those bookings and bill agencies should be properly cross-verified by the auditor. Commission, if any, is paid to the travel agent should be checked by the reference to the agreement on that behalf. Okay, by this, hotels audit has been come to end. Any doubts so far?
Okay.
Okay. So we'll come to the next important part, that is audit of cooperative societies. Now, in audit of cooperative society, what is cooperative society? So cooperative society basically is an autonomous association. Autonomous, that is independent association of persons which are united voluntarily to meet their common economic, social, cultural needs, and the aspirations are through a jointly owned enterprise. It is registered under Cooperative Societies Act 1912. Cooperative society is a business organization with a special mode of doing business by pulling together all the means of production, cooperatively eliminating of middlemen and exploitation from outside forces. So chartered accountant has to play a significant role in development of cooperative organizations. Apart from audit, okay. So a chartered accountant has to play a significant role in the development of cooperative organizations on scientific lines. Apart from audit, some professional services which a chartered accountant can render or give to the society is guidance in writing accounts, installation of accounting system, internal audit, management accounting services, taxation, etc. However, the main focus is to give guidelines about audit of societies in general. So audit as per section 17 of Cooperative Societies Act is done here. So the registrar shall audit or cause to be audited by some person authorized by him by general or special order in writing. In this behalf, the accounts of every registered society at least once in every year. So audit under subsection 1 shall include examination of overdue debts, and valuation of assets and liabilities of the society. The registrar, the collector, or any person authorized by general or special order in writing at times can have access to all the books, accounts, papers, securities of the society, and they shall furnish such information in regard to the transactions and working of the society. So, what is registrar? Registrar here is a person who is appointed to perform the duties of a registrar of the cooperative societies under this act. Any doubts so far?
No, ma'am.
Okay, we'll go for qualification of auditors here. Apart from a chartered accountant, within the meaning of Chartered Accountants Act, for people or persons who are holding a government diploma in cooperative accounts or in cooperation accountancy, who has served as an auditor in cooperative department of government has to be act as an auditor. So here, auditor of a cooperative society is appointed by the registrar of cooperative societies, and the auditor so appointed conduct the audit on behalf of the registrar and submit his report to the society. Audit fees are paid by the society on the basis of statutory scales. So in case of books, books has to be maintained by the registrar, and those books are as follows. All sums of money received and expended by the society, all sales and purchases of goods, assets and liabilities of the society. Now, in order to maintain proper financial accounting records, statutory and mandatory provisions have to be properly taken care of. Society is at liberty to maintain such additional records. Apart from this, cash book has to be maintained and cross-verified. Relating to cash, there are various books and various traces which can be audited, which include daily cash summary register, register of collection from debtors if credit sales are allowed, register of recovery of loan from salaries, loan disbursement register, and any other columnar registers or subsidiaries depending upon the nature and function of the society. Here we have restrictions on shareholdings. So according to section 5 of the Central Act, in case of society, liability of a member is limited. No member of a society other than registered society can hold such portion of the share capital that would exceed 20% of the total number of shares. So a person's share in the society can be maximum 20%. Total number of shares of the value has to be 1000 here. So the auditor of the cooperative society will be concerned with this provision so that any provision in the bylaws of the society is not contrary or it is not contradicting or opposite to this statutory position. Now there are restrictions on loan. Section 29 of the Central Act puts restrictions on loan. It states that a registered society shall not make a loan to any person other than member. There are also restrictions on borrowings. Section 30 says a registered society shall accept loans and deposits from persons who are not members, subject to restrictions and limits of the bylaws. In case of investments, a society may invest its fund in one of the following. So investment can be made in the central or state cooperative bank. In case of securities specified in section 20 of Indian Trust Act 1882, in the shares, securities, bonds or debentures of any other society with limited liability, in any cooperative bank other than a central or state cooperative bank which is approved by registrar on specified terms and conditions, in any other monies payable by central or state government. Also, in case of appropriation of profits, according to section 33 of the Central Act, a prescribed percentage of profit should be transferred to reserve fund before distributing amount as dividends or bonus to its members. Apart from this contribution, to charitable purpose shall not exceed amount exceeding 10% of the net profits remaining after compulsory transfer to the statutory fund. In case of investment of reserve fund outside the business or utilization as working capital, some of the state acts provide that a society may use reserve fund in the business of a society as working capital subject to the rules made in this behalf, may invest as per provisions of the act, may be used for some public purpose like to promote the object of the society. The auditor should ensure strict compliance with the state act and rules in this regard. Apart from this, in case of contribution to education fund, some state act provide that every society shall contribute annually towards the education fund of the state federal society at the appropriate rate, and contribution to education fund is charge on profit and not an appropriation. Apart from stat provisions, auditor may have to regard the provisions in bylaws and rules and regulations of the society. Transfer to reserves and dividends also has to be taken care of. So here, whatever accounting practices made, that should be all approval or prior approved in the AGM, that is annual general meeting. We see special features of cooperative audit. In this case, this diagram very clearly states the points which have to be clearly checked upon. 10 points. We start with examination of overdues, overdue interest, certification of bad debts, valuation of assets and liabilities, adherence to cooperative principles, observation of the acts and the rules, verification of members, registers and examination of their passbooks, special report to the registrar, audit classification of society, and discussion of draft audit report with managing committee. So we'll see this one by one. So first is examination of overdue debt. So overdue debt for a period from 6 months to 5 years. And more than 5 years will have to be classified. Overdue debts have far-reaching consequences on the working of a credit society. It also affects its working capital position. Hence, analysis has to be done for this. In case of overdue interest, this overdue interest shall be excluded from the interest outstanding and accrued while calculating profit. So overdue interest is interest accruing in accounts, the amount of which the principal is overdue. In practice of overdue interest reserve, it is created and the credit of overdue interest is credited to interest account is reduced. Certification of bad debts. So a very peculiar feature regarding the writing off of bad debts as per Maharashtra state cooperative rules is interesting to note. Bad debts can be written off only when they are certified as bad by the auditors. So this certification has to be done by the auditor and they should be certified as bad debts or irrecoverable losses by the auditor since the law requires so. In case of valuation of assets and liabilities, no specific provision or instruction under the acts have been given. So auditor will have to ascertain existence, ownership and valuation of assets. Fixed assets should be normally valued at cost less provision for depreciation. Incidental expenses incurred in acquisition and installation of assets should be properly capitalized. If the difference in the original cost of acquisition in the present market is of far-reaching significance, a note regarding the present market value may be appended. Also, adherence to cooperative principles has to be given. In general, the cooperative society organization is set up and has been achieved when it's working. Assessment is not necessarily in terms of profit, but also in terms of extending benefits to the members. That also again has to be cross-verified. Observations of the provision of Act and rules. So an auditor of a cooperative society is required to point out the infringement with the provisions of cooperative societies acts and rules. So financial implications of such infringement should be properly assessed by the auditor and they should be reported. Some of the state acts contain restrictions on payment of dividend, which should be noted by the auditor. All right, guys, any doubts so far?
No, ma'am.
Next is verification of member register and examination of their passbooks. So examination of entries in member passbook regarding the loan given, its repayment and confirmation of loan balances in person is very important. Specifically in rural and agricultural credit societies, members are not literate. Hence, this is a very good safeguard on their point. Of course, this checking will be resorted to on a test basis, which is a matter of judgment of the auditor. Also, special report to register during the course of audit. If audit notices that there are some serious irregularities in the working of the society, he may report these special matters to the registrar, drawing his specific attention to the points. So, the registrar, on receipt of such special report, may take necessary action against the society. In following cases, a special report may be necessary, wherein personal profiting by members of managing committee in transactions have been ultimately detrimental. Detection of fraud relating to expenses, purchases, property, and stores have been seen. Specific examples of mismanagement have been taken. In case of urban cooperative banks, disappropriation advances to vested interest groups such as relatives of management and deliberate negligence about the recovery thereof. Cases of reckless advancing where the management is negligent about taking adequate security and proper safeguards. Audit classification of society. Now, after a judgment of an overall performance, auditor has to award a class to the society. This judgment is to be based on the criteria specified by the registrar. It may be noted here that if the management of the society is not satisfied about the award of class, it can make an appeal to the registrar. Hence, the auditor should be very careful while making a decision about the class of society. Then we see discussion of draft audit report with managing committee. On conclusion of the audit, the auditor should ask the secretary of the society to convene the managing committee meeting to discuss the audit draft report. Audit report should never be finalized without discussion with the managing committee. So minor irregularities may be got settled and rectified and matters of policy should be discussed in detail. Is cooperative society clear to you guys?
Yes, ma'am. Yes, ma'am.
Ashish, are you comfortable with multi-state cooperative societies as well?
Yes, ma'am. For now.
Okay. So, Multi-State Cooperative Societies Act 2002, it came into force in August 2002, which applies to cooperative societies whose objects are not confined to one state. So, the funds of multi-state cooperative society cannot be utilized for any political purpose. This act contains detailed provisions regarding the investment of fund and restriction on loans, borrowings, etc. Books of account, okay. Now, as per Multi-State Cooperative Society Rules 2002, every multi-state cooperative society shall keep books of accounts with respect to all sum of money received and expended in respect of which the receipt and expenditure takes place, all sales and purchase of goods, the assets and liabilities, and in case of multi-state cooperative society engaged in production, processing, and manufacture, particulars relating to utilization of materials or labor or other items of cost may be specified. So, books of account here has to be cross-verified with all sums of money received and expended, all sales and purchases, assets and liabilities. If it is engaged in production, processing, and manufacturing, then books relating to utilization of materials or labor. Okay, clear so far?
इसमें मैम इसमें एक बार डिफरेंस बताओगे मिड स्टेट में और इसमें क्या होता है?
So, multi-state is not confined to one particular state. Okay, isme the society can be in multiple states, not only in state of not only in one particular state like Maharashtra or Gujarat or Delhi, but it can be in multiple states simultaneously. Like एक उनका एक branch या एक unit दिल्ली में है, एक चेन्नई में है, एक बैंगलोर में है, another one can be in Kolkata, so forth and so on. Is this clear, Ashish?
Yes, ma'am.
Okay, qualification is same. Only a chartered accountant can be appointed as an auditor. And however, the following persons are not eligible for appointment as auditor. Body corporate cannot be the auditor. Officer or employee, person who is member or in employment. Same, जो auditor के disqualifications हैं. Few of those are mentioned here, and person who is indebted to the multi-state cooperative society. Now here, okay, if the auditor becomes subject after his appointment, any of the disqualifications specified above, he shall be deemed to be vacated his office. Appointment of auditor, first appointment of the auditor of multi-state cooperatives shall be appointed by the board within 1 month of the date of registration of such society, and the auditor or auditors so appointed shall hold the office until the conclusion of the first annual general meeting. If the board fails to exercise its powers under this subsection, multi-state cooperative society in general meeting may appoint the first auditor. Next, subsequent auditors are appointed by multi-state cooperative society at each annual general meeting, and that auditor shall hold the office until the conclusion of the next AGM. Again, powers and duties may we see the auditor has to make following inquiries: whether the loans and advances have been properly secured and whether the terms on which they have been made are not prejudicial of the multi-state cooperative society which are represented. Just a second. You have to restart it. Right, apologies, guys. So the auditor shall make following inquiries: whether the loans and advances have been properly secured, no entries are prejudicial, where personal expenses have been charged to revenue account, where it is stated in the books and papers of the multi-state cooperative society, shares have been allocated for cash. That cash has been actually received, that also has to be cross-verified. Now, content of the audit report has to be on every balance sheet, P&L account, and every other document required to be part or of the annexed which is required. So auditor has to give best of his information according to the explanation, and this can be in the case of balance sheet of the state of multi-state cooperative societies. In case of profit and loss account, the P&L, the auditor's report shall also state whether all the information and explanation regarding the necessary purpose has been obtained, whether in his opinion proper books of accounts have been kept, or these evidences are adequate enough, whether the report on account of any branch office audited by a person other than multi-state cooperative societies auditor has been forwarded to him, whether the multi-state cooperative society's balance sheet and profit and loss account dealt with the report, whether they are in agreement with books and accounts of return. Now, power of central government to direct special audit. So here we have three opinions that the affairs of multi-state cooperative society are not being managed in accordance with self-help and mutual need. Also, it is managed in a manner likely to cause serious injury or damage to the interest of the trade industry, and that the financial position of any multi-state cooperative society is such as to endanger its solvency. Okay, so these 3 points are given in the chart below as well, the diagram. The central government's order direct that a special audit of the multi-state cooperative society has to be done. Appointment of the auditor in this case, it may appoint either a chartered accountant or the multi-state cooperative society's auditor himself to conduct the special audit. It means the central government, okay? Again, there is shareholding restriction that the government should hold minimum 51% or more of the paid up share capital. Special auditors' powers, duties, and report. The special auditor shall have the same powers and duties in relation to special auditor. The report of special auditor shall include all the matters required to be included in auditor's report. Here, action by the central government. Now, on receipt of the report of special auditor, the central government may take such action on the report as it considers necessary. Expenses pertaining to special audit. The expenses of and incidental to any special audit under this section, including the remuneration of the special auditor, shall be determined by the central government, which determination shall be final and paid by, and that will be finalized and paid by the multi-state cooperative society. And in default of such payment, that shall be recoverable from the multi-state cooperative society as an arrear of land revenue. This point is very important. Is this clear?
Yes, ma'am.
Yes, ma'am.
Now, inquiry. Now, when is inquiry by central registrar done? The central registrar may, on request from, when there is request from federal cooperative to which multi-state cooperative is affiliated, or a creditor not less than 1/3 of the members of the board, not less than 1/5 of the total number of members, when they are asking for inquiry, then only is the inquiry done. How is this inquiry done? So they hold an inquiry or direct some person who is authorized by them, who is inquiring the constitution, working and financial condition. Opportunity of being heard also is given here. So a 15 days notice must be given before holding such inquiry. The powers are given that the person who is authorized can at all reasonable times have free access to the books of accounts, can summon any person in possession or responsible for the custody of any such books, accounts, documents, securities, cash, or other properties. So any bylaw specifying the period of notice for general meeting requires the officer of the society to call a general meeting of the society by giving notice, not less than 7 days. Also, apart from this, he can summon any person who is reasonably believed to have knowledge of the affairs of the society. In case of follow-up, within a period of 3 months of the date of receipt of the report, the central registrar can communicate the report of inquiry to the multi-state cooperative society. financial institutions, if any, to which the society is affiliated, and person or authority, if any, whose instance the inquiry is needed. Inspection may, first we saw inquiry, now we are seeing inspection. So again, when the requests are from these three people, these three persons, I'm sorry, that is the Federal Cooperative Society, not less than 1/3 of the members of the board, not less than 1/5 of the total number of members. So by a general or special order in writing in this behalf, any authorized person can inspect into constitution, working and financial condition. Again, opportunity of being heard of 15 days is given here. Powers available to the central government are the same. They can have access to the books of account. They can furnish such information with regarding to working with the society as a central registrar, and an inspection report, that is a copy of the report of inspection under this section, shall be communicated to the multi-state cooperative society within a period of 3 months from the date of completion of such inspection. All right, any doubts so far?
No, ma'am.
So there are few entities left to end this chapter. Ashish will be continuing since Anil, this portion is pending. Would you like to join in the same? You can. If not, you can continue your revision. Okay. We'll be now
No, ma'am. Just
proceeding.
provide. Just provide.
Okay. All right. We'll be now proceeding with audit of trusts and societies. So again, there are three basic legal forms of charitable entities under Indian laws: trusts, societies, and Section 8 companies. So legal framework governing the charitable institution will depend on the form of business organization the charitable institution takes. So if the charitable institution is formed as a public trust, it will be governed by Public Trust Act. If the charitable institution is formed by a society, it will be governed by the Societies Act. If it is formed as a non-profit company, it would be governed by Section 8 of the Companies Act. Apart from the above legislations, Income Tax Act 1961 will also be applicable. In case of foreign contributors, Foreign Contribution Regulation Act 2010 would be applicable. Now, books of account, they have to maintain proper books of account like cash book, ledger, journal, copies of bill, original bills wherever issued, and any other book that may be required. In case of financial statements, preparation of financial statement like balance sheet and income and expenditure is necessary. Auditor's responsibility is to obtain the list of books and records maintained by the trust. Also, he has to comply and verify that those accounting standards and standards on auditing prescribed and those which are mandatory by ICAI are complied with, wherein auditor required, he can use his professional skill and expertise to apply audit test as the circumstances may require. Also, there are working papers which should be included. Those working papers include the work done while conducting the audit, explanation and information given to him during the course of the audit, decision on the various points, the judicial pronouncements relied upon while drafting the audit report, and certificates issued by the client management letters. So it is important that the audit working papers prepared or obtained by the auditor provides the evidence that opinion expressed by the auditor is based on the examination made by him. In arriving at his opinion, auditor has given due cognizance, that is he has recognized all the information and explanations which are given by the SSC. The information and explanation were full and complete. The auditor did not merely rely upon information or explanation given by the SSC. Also, reasonable test has to be done to verify their accuracy and completeness. In the case of trust, auditor has to ascertain whether the accounts are maintained regularly, whether receipts and disbursements are properly and correctly shown, whether the cash balance and vouchers are in the custody of the manager, whether all books, deeds, accounts, vouchers, or other documents or records required by the auditor were produced before him, whether a register of movable or immovable properties is maintained, whether the manager or trustee or any other person required appeared and furnished the necessary information, whether any property or funds of the trust were applied, there are any amounts outstanding for more than 1 year and the amounts were written off, whether any money of public trust has been invested opposite to the provision, that is contrary to the provision of applicable act, all cases of irregular, illegal or improper expenditure have been treated thereof, and such expenditure, failure, omission, loss, waste, or was caused in consequence of breach of trust, whether the maximum and minimum number of trustees is maintained, whether the meeting are held regularly as provided in such instrument, whether the minute books of proceeding of the minute is maintained, trustee has any interest that has to be checked, whether the trustee or is a debtor or creditor of the trust, whether anonymous donations received are properly accounted, whether the irregularities pointed out by the auditors are be taken care of, any special matter which the auditor may think fit or necessary to bring to the notice of deputy or assistant charity commissioner. Now, in case of societies, auditor should consider that it has been in under the legislation of Societies Registration Act 1860. Object of the society needs to be ascertained from its memorandum association bylaws. Its activities may include charitable, social, cultural, or educational activities. Ascertain whether it is also registered under relevant provision of Income Tax Act for tax exemption. Obtain an understanding of internal controls. Evaluate appropriateness of accounting policies with reference to donation and grant. In case some expenses incurred by the society are reimbursed by donors, ascertain how they are recognized. If any inquiry has been held by the registrar under applicable law, the working of financial condition of society and its implications. Ascertain all cases of illegal or improper expenditure or failure. And last point, ascertain whether such expenditure or waste was caused in consequence of breach